Alright, what's up everybody? It is Baller Trader back again, and it is a Sunday, November the 9th. I am fairly certain. And took a little break because I just didn't want to mess with this market, I didn't really pay attention much to this market because it just wouldn't stop, man. You know what I mean? And I wanted to wait for a point in the market where it would actually settle and give a clear, low risk time to engage in the market, which I think we found here, and that's why I'm back. Um, this certainly was pretty exciting, but like I said, I tried not to focus too much on Bitcoin just because, well, for a couple of reasons. Number one, when price is rising like this, from when it's doubling in price, a even like a 2% risk is actually your risk doubles as price doubles, right? So when we're trading at 200, kind of got used to trading at 200, kind of got comfortable with my risk strategy there. But as price goes up and up, now if I'm risking 2%, I'm actually risking double the monetary value, and and the volatility just made the ranges wider. You had to put your stops in like further away from your trade entry. There's a lot of stop rates, a lot of volatile action that just made for a very turbulent market. And best strategy was just to hold and incrementally piece out of the market. And obviously, I sold too early, and I didn't. I just didn't want to be tempted to get back in. And obviously now we've gone down and everything's feels better now. And now we're looking to make another move. And I'm gonna break down what I'm thinking. Let's just remove all this drawing tools and let's go fresh. So on the weekly chart, there's this order block, which I don't think is too significant, but it did go right up to it. And then there's this high that we took out. I think possibly, I think Bitcoin is bullish. I know that's pretty profound, but I think it's a good sign that we broke out of this range, and I do think we're in for some pullback. And let's just mark up where I foresee some reaction. I think this is a very good point to see a retracement to 316. We've got the bodies of candles here, got the lows here, we've got a high here, we've got the high here, and I do expect to see 315 in the coming weeks for a couple reasons. Number one, when we have these wicks that are unwilling, that see price unwilling to retrace back up into it, that is often a sign of weakness. As we see here, a wick here, we see a failure to retrace as we consolidate below this gap up, and we see it go down, and we see a wick here, and we see a failure to retrace and trade in this range, and we see it move against, we see a retracement. We see this wick here, we see a consolidation and a failure to retrace back into this price point, and then we take off. Now we got this crazy wick here, and we're seeing a consolidation here and a failure to move back into that range. And this ties in with a pretty big concept. It's very prevalent in Bitcoin. It's probably maybe the most powerful thing to understand in Bitcoin is basically a market cycle in Bitcoin. ICT teaches it as the 4 market profiles, but really it's just so distinct in the Bitcoin market that it's almost like one market cycle is what I'll show right here. We have a trend, then we'll have a reversal, then we'll have a retracement, then we'll have a consolidation. And these are distinct market profiles in all markets, but Bitcoin follows this formula to a T, and I'll show you what I mean with a couple examples. Actually, I'll just run through the whole thing. We have a trend, we have a reversal, we have a retracement, then we have consolidation. This consolidation is going to give birth to a new trend, a new reversal, then a retracement and a consolidation, which is a new trend, a reversal, a retracement, a consolidation, a new trend, a reversal, a retracement, a consolidation, new trend, reversal, retracement, consolidation, trend, reversal, retracement, consolidation, trend, reversal, retracement, consolidation, trend. Damn it, broke my flow up, man. Trend, reversal, retracement, consolidation, trend, reversal, weak retracement, but really just a massive consolidation into a trend, into a reversal, into a retracement, into a consolidation, and now we just trended, and the next step in the formula is a retracement of some sort. Now it's possible that we're just dealing with one of these fucking scenarios. This just you know, a moon launch, but that is unlikely, given that this only happens like once every, probably longer than a year, maybe like once every year and a half or something. But even then, that's not relevant. The fact of the matter is it happens very rarely, and the money is going to be made just following this system. And when you're wrong, just reducing risk. And when you're right, you're going to be right more than not, and it's going to be good. I hope that didn't ruin my recording. I just got a phone call, and I'm recording through my phone, but just broke my flow up again, man. So anyway, we're in a retrace or a reversal, and we see this. This is obviously an active area of the market. We would expect 316 price to at least come down to there, but this is a very extended move and could go lower, but we're looking for a reaction at 316, and even further confirmation or confluence is this order block, which I expect to see some reaction at 328. So this is a good range to be looking at a reaction. If we break that down, we do see price unwilling to retrace up, and as time goes on, this is what I was waiting for pretty much, as the market is going to be shifting between volatile environments to very non-volatile environments. It's going to expand and contract. So the further time we remove ourselves, or the more time that we are removed from a volatile environment, that just means we're getting more consolidated. And that means that our risk is lower in a consolidation. You see how there's not much, you know, for lack of a better word, I guess, fuckery going on. Whereas you see these wicks, if you entered a trade here, you're just screwed. If you entered anywhere, you're just getting screwed because it's very volatile. Now we see this contraction come into the market, and it's a very good time to, you know, pick our next move and keep our stops tight. And I think that, actually, I thought about making this video like right here. And so basically right here I think was a good entry, and I don't suspect price is going to recover. I think Bitcoin is dead. Not really, but I think that we are starting our descent down to 315. One thing to look out for is this. If we just got down to 365 and showed an unwillingness to go lower, that might just be it for now. And then we might get a bigger retracement up into this price action up here. But if we were looking to make a trade somewhere around here, I think that enter somewhere around here with a stop somewhere around here, 387. And really, it could go right above 386, but just because of these two highs, they're really clean, you might want to give yourself a little room to breathe. So that's what we'll do. And that's pretty much it. Looking for some downside, and yeah, just looking for some retracement. yeah, that's all I got to say. And basically it. I've got the slides made for video series number 3. It's about the market profiles that we went over. That basically the cycle or the blueprint that I just discussed in this video. I'm gonna make a 30-minute video on that, or however long it takes. So I've got the slides made. I just don't have it fully formed in my head because I don't really go off notes. I just think about it until I feel like I can talk for 30 minutes fluently about it. So yeah, that's what we're looking at. And that's all we got. So until next time, just keep Bitcoining. All right, peace.